Welcome back to my channel. In this tutorial, I'm going to show you how to analyze income statement using horizontal analysis. What's horizontal analysis? Horizontal analysis, also known as trend analysis, is a technique used to evaluate financial statement data over a period of time to identify patterns or trends in performance. Purpose of horizontal analysis: to detect growth, decline, or stability in key financial metrics, helps in forecasting future performance, useful for comparing a company's performance across multiple years or quarters. How horizontal analysis works: you compare financial data line by line across periods, e.g. revenues from 2024 versus 2025, and calculate 1. Amount change, percentage change, and comment on the changes. To do the changes, the first one is absolute change. Take the current period, then you subtract the base period. That one will give you the absolute change. For percentage change, pick the current period, deduct base period, then over the base period times 100 to give you the percentage. Download this template from the link in the description below and follow along to do this analysis together step by step. Let's get it started. So this is the data we are going to use. This is statement of profit and loss from Dandrix Consultants from 2023 up to 2025. So we are going to conduct horizontal analysis. So we are going to pick the current. So let's write 2025. Sorry, 2025 versus 2024. Then let's format it. Then go to home, pick format painter, then click it there. Okay, nice. So let's extend it a bit. Let's merge it. So this we are going to put a change. So press Windows and full stop. So click there, then pick that icon. Okay. So that's the icon for change. So we're going to do change in dollars. Then here we're going to do copy it, paste it. So this is going to be percentage change. So let's edit. Okay, so that's the percentage change. Let's center it. Okay. Let's center this one too. Okay. Okay. So let's write horizontal analysis. Let's edit it. Go to home. Let's increase the font. Okay. So we'll start with calculating the change. So pick the current, then which is equals to the current, which is 2025, minus the previous, then enter. Okay. So let's copy it, paste it there to do it for cost of sales and gross profit. Then for operating expenses, copy it to get our operating profit, then copy it down, then copy it again. Okay, so we're done doing the calculating the change. The next thing we're going to do is to calculate the percentage change, which is equals to the change that we have divided by the base year. Our base year is 2024. Then you multiply by 100. So let's put it one decimal place. So copy it, paste it down. Okay, paste it again. So let's delete that one. This one is empty, so let's delete it. Let's copy it down again. Paste it. Paste it again. So we're done calculating the percentage change. So the next thing we are going to do is to do commentaries. So let's extend this. This we are going to do our expert comments. Let's extend it. Let's write comments. So let's format it. Format paint. Okay. So let's highlight, then go to home, then merge and center. Okay. Okay. So the next thing we're going to do is revenue analysis. So you'll find that our revenue increased by 265,398, which is 2.8%. So the revenue increased due to the following: 1, increased sales volume; 2, expansion to new markets; 3, effective marketing and promotion; then raising prices without losing customers; then finally, exchange rates in case we are dealing with foreign currency. So you can comment and say, revenue increased due to introduction of a new product which expanded the sales base and market research and market reach. So next we are going to do cost of sales analysis, which reduced by 54 to 59, which is approximately negative 1%. So the cost of sales reduced while the revenue increased. This is attributed to the following factors: 1, bulk purchasing or negotiations; 2, reduction in raw material costs; 3, product redesign or innovation; or operational efficiency. One can be foreign exchange. So you can write and say, the slight decline in cost of sales attributed to bulk purchasing, resulting in economies of scale and improved supplier discount. Okay. So let's do the gross profit margin, gross profit analysis. The gross profit analysis increased by 319, which is 7.3%. And this is attributed to the combination of increase in revenues and reduced cost of sales, which led to a stronger gross profit margin improvement. So you can write and say, the combination of increased revenues and reduced cost of sales led to a led to a stronger gross profit margin improvement. Gross profit margin improvement. So let's go to operating expenses. Let's start with sales and marketing. Okay. The sales and marketing reduced by 0.2%. So this is stable. You can say this is stable and within the planned budget. Nothing much to write about it. So just write this is stable and within the budget. The decline is within the planned budget. Let's go to technology and development. This increased by 23,809, which is 3.3%. This is also in line with the revenue increase of 2.8%. But you can say this is driven by hiring of IT consultant and a new software solution to improve our operations. So you can write and say increase driven by hiring of IT consultant and a new software solution to improve operations. On to our next one. This is general and admin expenses. This also reduced by 2.3%. So the reduction is attributed to restructuring efforts, including staff layoffs and tighter cost controls. So generally, we can say the operating expenses increased by 0.7%. Increased by 0.3%. So you can say that the minor overall increase as a result of savings in the admin offset most of the tech and development expenses, because you can see the tech increased by 3.3%, while the general and admin reduced by 2.3%, which that one offsets it to 0.7%. Okay. So you can write and say minor overall increase as savings in admin offsets most of the tech and development expenses. Okay. So let's go to operating profit. The operating profit increased by around 306,000, increased by 306,640, which is 11.8%, approximately 12%. So this one is a strong, you can say the strong improvement is driven by higher gross profit and controlled operating costs. Strong improvement driven by higher gross profit and controlled operating costs. So let's go to interest expenses. The interest expenses also increased by 16,844, which is 10%. Okay, the interest expenses basically these are from loans or long-term debts. So let's go to our balance sheet and check if it increased. Just check the long-term debt. Okay, our long-term debt increased from 12 million to 14 million. Okay. So that is what increased our interest expenses. So you can write and say interest expenses rose due to new or additional loans or long-term debt taken, increasing financing costs, So let's go to income before taxes, which increased by 289,796, which is 11.9%. Okay, so you can say growth mainly due to improved operational efficiency and expansion. So the next thing is provision for income tax, which reduced by 7.4%. So we can comment and say tax provision decreased despite higher profits. You can see we had higher profits in 2025, but the tax provisional for income tax reduced. So you can say the tax provision decreased despite higher profits, potentially due to tax planning strategies that the company employed. So the last one is our net income. The net income increased by 316, which is approximately 15%. So you can say that this is a strong finish with the company delivering double-digit profit growth through revenue expansion, cost control, and strategic investments. So this is our analysis. This is our horizontal analysis. So the next thing you're going to do is just to put a conditional formatting. So just pick the revenues first and the profits, pick them. Income before tax, hold on to control, pick the revenues and profit. Then go to home, go to conditional formatting, icon sets, then let's go with that one. Okay. So you can see even the revenue is still red. So let's edit the conditional formatting, go to conditional formatting, then manage rules, then edit rules. Let's change this to the percent to number, then that one to number. Okay. So when it's more than this 0, it's going to be green. Then less than 0 is going to be red. Then press OK. Press OK again. Okay, now nice. So the next thing we're going to do is to do the conditional formatting on cost of sales and expenses. So let's click them, hold on to control, pick the operating expenses, pick interest expenses, provision for income tax, go to home, conditional formatting, then icon sets, then let's go with the other one. So let's edit them, because if cost of sales reduce, it means it's a good thing, it's a positive thing. So we are going to reverse it. Okay. So go to home, conditional formatting, manage rules, then edit. So let's change this to number, then the other one also to number. So the next thing we're going to do is to reverse the order. So such that just come and click reverse the order. such that when it's positive, it's red. When it's more than 0, it's red. When it's 0, neutral, yellow. Then when it's less than 0, it's be green. Okay. Press OK. OK again. OK. So now this is nice. Okay, so this is our analysis. So you can try it out. In case you're watching us for the first time, remember to hit the subscribe button. You can download this file, this completed template, and try it on your own. Thank you for watching. Remember to subscribe, comment, like, share, and follow. Bye.